the first big opportunity we see is on the eastern seaboard of Africa, where the enormous mineral discoveries, primarily in gas and increasingly oil, that are occurring, coupled with the geopolitical needs and demands of both Japan, that's mothballing nuclear plants, and India, that can't necessarily put the infrastructure together, means that there's an enormous amount of fully funded capex going into that part of the world to build everything from LNG plants to rail links to bring landlocked minerals to the coast, to huge infrastructure needs in the case of ports, which will significantly benefit local companies. And we firmly believe that having exposure in the first instance is the companies that are finding the assets in the minerals or mining and oil and gas space, and then in the second instance, those who facilitate the funding, primarily in the financial space. And I know James was here, but we have a bigger preference for Kenny Commercial Bank because they have the right strategy going after the big transactions in big countries. We feel that that is a secular opportunity set which hasn't been clearly recognized in the markets and has delivered in absolute terms over 50% annualized returns so far in the last 2 years, and will continue to do so. I'm also a big fan of fixed income, but I also do believe that sovereign debt across Africa, more so in the locally denominated currency markets rather than the US dollar denominated sovereign markets, is the place to be. We do believe that the time has passed to get involved in US dollar denominated debt. I mean, Zambia, a B- country, great place to visit. I was there 3 months ago, but it shouldn't have the ability to raise money at 5.625% in US dollars. We have a better preference for local currency in Ghana. The election is coming. The real likelihood, all the punters are saying there will be a change in government. You're going to have a centre-right government rather than a centre-left government. And if you as a foreign investor decide you want to get exposure to 5-year money, especially after the local currency's fallen 20% on the year, you can get paid 23%. So those are the two areas where we think that you should have exposure. And actually our fund has about 30% of its exposure in local currencies across the African continent. Panel and I are here to talk a little bit more specifically than some of the themes that you've heard about. I think you've heard a lot of talk about the investment opportunity and how it stacks up relative to other opportunities. You've heard about some of the themes that are driving people into the continent. And actually, what you have here is a panel of people who are actually at the coalface. So ultimately, if you make investment decisions to get exposure to Africa, these are some of the best and the brightest who are actually doing it and will be doing it on your behalf. We do have a mix of public and private funds, and almost an even mix, and we have a couple of an alternative in here as well. And rather than me spend a huge amount of time telling you about what I think you should be doing, I'm going to allow each manager to briefly introduce himself or himself, and then talk a little bit about the specifics, which is what exactly they will be doing with your money if you make an investment with them over the course of the next 12 to 18 months.
Doing business in Africa. You can't afford to be without Africa Investor.